Yo guys, welcome to the new video. Today I want to talk about the stuff where nobody in the YouTube never talk about. Everybody will tell if you want to be profitable, you should understand this stuff, this stuff, this stuff. In the 2019, everybody told the smart money concept is the new trend. And in the 2023, everybody is telling the liquidity is the new trend. It's just because the brokers will induce the false education into the society. They will pay the influencers a lot of money to make the false marketing and make the retail traders to trade more, because the only way that brokers earn money is when the retail traders trade. If there are no traders, retail traders trading, then there will be no money to the retail brokers. So 40% of their commission money earned by the retail brokers from the retail people will spend on the marketing by the retail brokers. It's all available data in the FX Street website. So if you see, it's all false education. You see, the brokers, big brokers will trade against you. Why they trade against you? Because they will earn money, because there is a fact 90% of the retail people will lose money in the starting 90 days. So because of that single fact, they will trade the orders against you. So do you still trust the education that was taught by the brokers? That is completely false. They teach you wrong educations like to execute in the 1 minute time frame. You should trade like this, support rotation. This is completely false education to make you lose the money in the markets, even it's forex market or stock market or indices, futures, anything. It's completely a scam. It's completely a matrix that is trying to take your money off from your pocket. It's completely a gambling type of thing if you are trading the retail concept. Because one thing, if the retail broker told you you should buy at support and you should sell at resistance, if you see, all the retail people are doing here, they are selling at the here and the stop loss is here. Who will buy? Who will buy here? The market makers should buy here. Would the market makers take the loss and give the money to the retailers? No, never. They all wanna take the money from your pockets to their pockets. So that's why they will induce this false education towards the slaves, and the slaves will take sell here and they will take buy here. Their stop loss orders will be here. Stop loss orders will be here. And if the big banks, financial institutions, many companies, because many companies wanna uh, make the deals with outside of the country. For example, if there is a country in the US and they are selling their stocks in the Japan, so they need to look at the FX market very closely, because if their annual profits is 20% and the Japan currency dropped 20%, there will be no profits. So that's why they should hedge the currency. So that's why many big companies and big central banks will participate in this FX market. So it is so liquid market. So how they execute their positions with less slippage? Because if they want to buy the positions, there should be lot of liquidity. Otherwise, they can't execute their positions. I think you are getting what I am telling. You should just use the common sense. The retail liquidity is just 1% of the total big liquidities like hedge funds, market makers. Lot of big players are there, pension funds. Lot of big players to execute their orders. They need liquidity. Where is the liquidity? The liquidity is the retail people or the liquidity. So they will induce these fake chart patterns to make the retailers think, oh, they will give the reason for the smart money people to enter the position and the retail people to enter the position at their stop losses. So what they will think is, they will hit their stop losses. Now they got all the money to execute their orders. There is an algorithm behind the markets. It's called Enigma. The only job of the Enigma is to find the liquidity for the big orders to be executed. So the Enigma role is to induce the fake chart patterns. The first thing is they will induce the traders by making the fake chart patterns like this, like trend line, support and resistance, equal highs, equal lows. And then what the Enigma will do? It will take out the liquidity, and then by taking out the liquidity, for example, here there will be lot of stop losses. Stop losses means automatic sell orders, right? Because they will buy The stop loss means opposite of buy, which means sell. So after all the sell orders are executed, now the market makers got all the liquidity to execute their buy orders without slippage. That's the main point here. Because if the market maker want to execute the buy orders, they should have the sell orders, opposite orders, right? So they got all the liquidity. They will execute here, and then they will again trap the trader, and then they will execute here. The main thing they will do stop hands because of the liquidity problem. This is the how the mechanics of the market works. If you don't understand the mechanics of the market, you can't trade. This is how the market moves. Nobody will tell you the real mechanics of the market. There is no bullshit in this video. Straight to point. If you are watching the ICT videos and just smart money concepts or anything, you never understand how the market mechanics works. You should read a lot of books about the dark pools, liquidity pools, etc. How the HTFs and quant trading shifted the whole trading industry, everything. There is no bullshit video. So, how do you identify the liquidity graphs? This is the main point to discuss in the video. So, the first thing you should identify is the inducement of the liquidity. First thing you should identify the patterns. These are the patterns, fake patterns that the market maker will create in the lower time frames. If there is no fake pattern, there will be no liquidity for the big players to enter the market because there is lack of liquidity. With the lack of liquidity, they can't execute. So first thing you should know is who are market makers. Market makers is the financial entity that provide the liquidity for the total marketplace. They will earn the profits from the bid and ask prices. They will earn the profits from the bid and ask price. For example, let's see here. You are executing a trade here. For every buyer to execute their sell, there should be a seller. For every seller to execute their trade, there should be a buyer. So the market maker's job is to, there is a buyer, there is a seller. The middleman is the market maker. Market maker job is to combine this both. So they will earn some commission here. The commission is the spreads. The spreads, they will earn the money from spreads. And also, they also should do, if there is no seller for the buyer, they should buy or they should sell. So they are providing the liquidity for the market. This is the main role of the market makers. So if they are doing this job, they are doing very good job. But they do lot of hidden job because they have full access to the price movement in the market. So what they will do is they will create the fake chart patterns, and then they will induce the liquidity like this, and then they will go. They provide liquidity like this to the banks. They don't take their own money and sell, because if there is a hedge fund selling billions of dollars, it will be a lot of loss for the market makers. If the market went lot of volatility and moved in one direction, there will be lot of loss for the market makers. So what they will do is they will simply trap the retailers and they will take all the money and move in the real direction. So this is the small thing of mechanics of behind the forex market, how the market maker is trapping the retail people and everything. And also many people think that broker is hitting their stop losses. There is nothing to do with the broker. So I will explain the mechanics. What happens? There is a broker, there is a market maker. Market maker and the liquidity providers are the same. So what they will do is, let's say you are the trader. If you first open your trading account in a broker, they will first debook you. Debook means that broker will take the opposite trades of you, because many brokers will do this. Many brokers are debook traders. So if you lose money, they gain money. They exactly take the opposite bets of you, because of the fact 90% of the traders lose money. And if you are profitable and you are taking the broker's money, what they will do is they will a-book you. They will directly send your orders to the liquidity provider. Now you are entering into the real market. This is the b-book, means the broker is trading against you. Now if you are entering into the real market, then your orders are executing by the market makers. You mean if you open a 1,000 lot position, there will be no spread, very little, because the market maker, you are in a little chunk in the huge version of the liquidity. So then you are entering into the liquidity provider. There are disadvantages and advantages for both the B-book and A-book broker. So that stuff is for complete different another video. So this is the main thing happening. Your broker is not responsible for the stop funds. The broker is only responsible for the ghost wicks. There is a called ghost wicks. For example, this is a FXCM broker. Here, what happened is if you keep your stop losses here, the broker can widen the spreads at slippages and take your money and then go. In the chart, it won't look, the wick will not be there, but in the real time, when you are executing, the brokers will do this. This is the type of manipulation that brokers will do. And this type of fake patterns is not done by the brokers. The brokers can't do. The brokers are just a middleman between us and the market makers. They are just a middleman. And the market makers are the people who design this complete market algorithm. So that's why they induce the traders and they fake out the traders. They exactly know the psychology of the many traders because many banks also use the retail concepts. There are 25,000 banks and 32,000 private banks. All are retail, all trade retail. The only big players are the central banks, mega companies, hedge funds, everything. So in this video, I will explain how they trap. This video may take some long time, but I make sure I can give my best. So first thing, when you are doing this type of trading, you should widen your area. So you should identify the traps. First, you should identify the traps. Where's a trap you can find here? You should go to the daily time frame or 4-hour time frame. If you see, you identify the last recent daily liquidity sweep. Last recent daily liquidity sweep. This is the last recent daily. There is a lot of like trend line liquidity is taken out, right? Lot of trend line liquidity is taken out. So what you can expect if the lot of trend line liquidity is taken out? You can expect the market to fall. Up to where you can expect the market to fall? You just keep an idea in your mind. This is the liquidity point where you can expect the market to fall. So when you go to the 15 minutes time frame, this is the strategy where you do not need the 1 minute, 5 minute, etc. I just execute on the 15 minutes time frame. And also in the 15 minutes, you should identify the trap that is aligning with the daily trap. There you will get very sniper entries. If you see, this is the retail trendline liquidity and it was breaked here. The retail trendline liquidity breaked here, sweep, and then you can enter the short position exactly here. Stop losses exactly at the top of the wick. Here you can keep your first target here and you can keep the second target here. This is how you can trade the liquidity concepts. You are going with exactly the market maker. I'm not telling you don't get losses, but this strategy is very accurate and it can provide very high risk reward ratios because we are just going with the market makers. We understood the market mechanics. The problem when it will come is when you are focusing wholly on ICT. The ICT, I think that ICT videos, whole videos can be explained in single 1 hour video, but he overcomplicate stuff. I think just because to earn some money from the YouTube. So this is what exactly same scenario happen every time from. I have given you the key. If you go and backtest the scenarios, every time it will happen. I'm not telling the speed and aggression is the key. If there is no speed and aggression, like the speed and aggression means momentum candles. Why they are only producing these type of candles, not these type of price action by taking the liquidity? Because they exactly know the psychology of the traders. They exactly know the masses psychology. If the masses are seeing this lot of imbalance candles, what they will think? They will think the price is falling. There is a huge momentum break, so the market should reverse. They will enter here. They will buy, sell here, sell here, sell here. So all this liquidity is taken out. Then the market will reverse. Same thing, same this stuff I showed here. Same thing, right? Speed and aggression is the key. The speed and aggression is always the key. Can you see this trend line liquidity again? Take it out with the speed and aggression. Simple thing, you can enter here, you can buy here at the wick, 50% of the wick. Always you should keep the RR less and target more. That's how you can break the banks. This all 2 hour, 1 hour is the bullshit knowledge. You can literally follow the banks. That's it. This is the video, guys. This is what I thought to explain you, and I think you all understood how this matrix everything works. This is completely a scam. If you are thinking that after learning the retail concepts to earn money and trade for the full time, you are fooling yourself. It doesn't work like this, guys. It's very big scam industry in the world. You should understand everything, how the big players are working, everything. Then you can do what they're doing, or you can follow them, because you can't go against them. You can just follow them and earn some money. Same thing. Liquidity, speed and aggression, taking out the liquidity. That's it. Boom. High quality trades always arrive from here. Liquidity, speed and aggression. Can you see the speed and aggression taking the liquidity? Boom. Same stuff, guys, happens over and over and again. See, liquidity taken out. Boom. Not every day there will be trades, but there will be very high quality trades like this. You should just identify the liquidities, sweep, boom. The thing is, I'm currently working on the timing aspects, working on the best times, high volume times. So after it came, the strategy will become very insane. It become even more powerful. See, sweeps, all the secret lies in the liquidity sweeps and speed and aggression. The speed and aggression, everything. There are a lot of examples, guys, about the speed and aggression. After the speed and aggression, you can use this as the OB2. You can enter here because the liquidity is taken out. You can enter here, target the high type of liquidity. Same thing here. It's like magic, guys. If you want to see it, you can't unsee it. You should. The one thing I will tell you, in the life or in the markets, you should not follow the masses. If you are following the masses, you are under the control of the higher authorities. Means these market makers, this is the market algorithm can print these patterns like this. And there are some people who are making money out of these patterns. That's true. There are many people, retail people, who are consistently making money because they have a proper mindset. If you have a proper mindset, you can easily earn like 3 to 4% per month using the retail concepts. Not every month you will earn money using the retails, but you can consistently earn money. But with my concepts, you will get high risk reward and the high win percentage. With that, you can earn more money, more percentage gains than the retail people. That's what, because I have a simple edge last year in the 2022 and 2023. With that edge, I averagely made 70% this year. With that simple edge, in the 2023 year, I made 70% net gain all months. The December only, it has a losing month, minus 4%, but there are still days in the December we should see. So that's the simple edge. But when I combined these liquidity concepts and figured out how the market works, this edge is delivering more than 15 to 20%, averagely 15% per month. If you can do the math, it's lot of insane money when compared to my previous edge. So I'm collecting lot of data for this edge. So anybody who wanna learn this edge, you can text me on the WhatsApp. I can give you a private mentorship call. If you need, I will give my WhatsApp number in the description. You can message me if you are interested. Peace, guys. Hope you enjoyed the video and liked the video.